$500 million disappeared from Tabcorp's market value before lunchtime in Sydney. The broader ASX 200 was up nearly a full percent. Mining stocks were surging 3% on peace hopes in the Middle East, and gold was flying. Against that backdrop, one wagering giant collapsed in isolation. The session started with relief. Overnight, Wall Street had cannonballed into optimism. The S&P 500 jumped 1.5%. The Nasdaq ripped 2% higher after the White House floated a proposal to ease the Strait of Hormuz blockade. Brent crude briefly fell below $100 a barrel, handing energy-heavy economies like Australia a much-needed reprieve on fuel costs. The RBA's analysis, released this week, had already flagged that a 10% rise in domestic fuel prices pushes the overall price level up by 0.2 to 0.25 percentage points over 1 to 2 years. With oil pulling back, that pressure appeared to ease. Material stocks led the ASX charge. Orica, the mining explosives company, rallied almost 6%.
AUSTRAC launched a formal investigation into Tabcorp's compliance with anti-money laundering and counter-terrorism financing obligations. That is not a fine. It is not a settlement. It is the opening of an investigation, and the market responded as if the verdict had already been handed down. The mechanism here matters. AUSTRAC investigations do not typically end quickly or quietly. When the regulator sent a letter to Crown Resorts, the process ran for years and touched off a cascade of royal commissions, license revocations, and forced leadership changes. When AUSTRAC pursued Westpac, the bank paid $1.3 billion in 2020 over transactions linked to overseas child exploitation. Commonwealth Bank paid $700 million in 2018. Star Entertainment has spent years in regulatory recovery without a full resolution. The market has seen this pattern enough times to know the letter is rarely the worst of it. CEO Gillian McLachlan, who previously ran the AFL, told the ASX the company was committed to leading a compliant and safe company and would work constructively with AUSTRAC. That language is standard and appropriate. It also does nothing to resolve the uncertainty, because the scale of a penalty if proceedings reach legal action is unknowable at this stage. This is the condition that makes the 25% single-day fall look rational rather than excessive. Investors are not pricing in a known fine. They are pricing in a range of outcomes that extends from a managed settlement to a structural threat to the license itself. Wagering licenses are state-granted, not federal. A separate regulatory chain could activate independently of the AUSTRAC outcome. That possibility is what keeps the floor uncertain. But here is where the picture gets more complicated. The two scenarios are not equally likely, and the market may already be pricing the tail risk too heavily.
The historical cases offer a way to calibrate. Commonwealth Bank's $700 million fine in 2018 was the largest civil penalty in Australian corporate history at the time. Westpac's $1.3 billion settlement came 2 years later, exceeding it. In both cases, the share price recovered within 12 months of the settlement. The mechanism of the recovery was consistent. Once the penalty amount was known and the compliance uplift program was underway, uncertainty resolved and buyers returned. Tabcorp's pre-announcement market capitalization was $2.63 billion. A Westpac-scale penalty relative to market cap would be existential. A Commonwealth Bank-scale penalty, adjusted for Tabcorp's smaller size, would be severe but survivable. The gap between those two outcomes is exactly the range the market is currently trying to collapse. The counter-signal, the case for a faster recovery than Crown or Star experienced, is that Tabcorp is not a casino operator. Wagering has a different regulatory exposure profile. The AML risk in wagering is real, but the pathway to license revocation is materially longer and less politically charged than it was for Crown Sydney or the Star. If the investigation produces a penalty with a clear compliance roadmap, the stock recovers on the timeline the banks followed, not the timeline casinos have followed. Verification benchmark. Watch for any statement from Tabcorp specifying the scope of the alleged breaches. A narrow scope, specific product lines or time periods, would signal a contained penalty and give the recovery case its first foothold. A broad scope citing systemic failures across multiple years would extend the timeline toward the casino precedent. The ASX 200 rising while Tab fell 25% is the kind of divergence that eventually resolves in one direction. Either the investigation scope narrows and the stock retraces toward its prior range, or the broader wagering sector starts pricing in regulatory scrutiny more widely, with names like PointsBet and Sportsbet's listed parent Flutter entering the conversation. The next disclosure from Tabcorp, not a timeline anyone controls, is what determines which path opens first. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.